Elevator Pitch with Jonathan and Mitch is made possible in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York.
Hi, I'm Saraiya, and I'm about to go on Elevator Pitch with Jonathan and Mitch.
Welcome to Elevator Pitch with Jonathan and Mitch. I'm Jonathan Schein.
And I'm Mitch Berkey.
Hey, Mitch.
Yes, Jonathan.
Guess who's here today?
I know who's here. We have Saraiya in the house.
And he is the Deputy CIO and Head of Platform Investments for Madison International Realty. Welcome, Mo.
Thanks for having me, guys. Big fan of the show.
All right, why don't we just dive right in and start off with...
Right in.
Why don't we just dive right in and find out what exactly that means, Deputy CIO and Head of Platform Investments, because platform investments seems to be taking a lot of steam these days.
Yeah, for sure. I mean, just big picture, Madison, real estate investment firm, headquartered in New York City, but offices globally, London, Frankfurt, Singapore, Los Angeles. And our story has been around providing liquidity solutions. Historically, that's been expressed more as a real estate secondaries strategy at the asset level, providing liquidity for LPs, GPs, but in the context of a real estate deal. So think minority recap, partner buyouts, and that's been the staple of the Madison franchise for a long time. I came over about 2 years ago to lead a new but related strategy around platform investing. And very simply, we provide strategic capital to middle market, vertically integrated real estate businesses. About 70-80% of it goes into deals as either GP capital or strategic LP capital, whereby we could seed a fund, SMA, but the goal of that capital is to bring other AUM around it. And that's complemented by a smaller investment into the APCO, where we're typically buying a common equity minority stake in the business.
Well, Mo, we're going to drill down deeply into all of these buckets. So we've got platform investing and we've got liquidity solutions, right? Let's start with liquidity solutions.
And along those lines, do you also buy out LP stakes from the LPs themselves, or do you provide LP capital to the other firms that are looking for this liquidity?
Yeah, I mean, historically, Madison's strategy has been around a direct secondaries business. So we provide liquidity to LPs. Generally, that's the predominance of our business, but at a deal level. So let's just say this LP is in a JV with the GP and other LPs on a specific asset or a portfolio, and they need liquidity for some reason unrelated to the real estate, then Madison can step in and buy that position, typically at a discount. That's how we get our return. So that's been historically the business of what we're doing. But I lead, again, a different but related strategy, with the idea being that we're a full service liquidity solutions provider. We did it at the asset level, the portfolio level, but my strategy allows us to do it more at the GP level as well, call it GP solutions, partnerships, et cetera. So expanding the scope of what liquidity solutions means.
So let's get into the GP side. Someone with a need, how do they find you?
Yeah, I mean, it kind of goes both ways, right? I mean, we feel like we have a pretty strong brand in the marketplace around liquidity solutions and platform investing. So we get a lot of inbounds just by virtue of that experience, and people can see the groups we've worked with as well. But there's a lot of us hustling, getting out in front of groups. There's intermediaries that are part of this business that, and they play a big role, because this is a big decision to a platform investing to allow a partner into your business. It's still a pretty small process. It's not marketed the same way a transaction would be. But the best flow is our off-market flow. We know these GPs through our network, through being in the business a long time. But the best one is when a GP says, hey, I have a buddy that is thinking about doing something here. Could you talk to them? And those relationships often start out as contact, advisor, confidant, and then maybe we find a way to do business.
Well, with your reputation in the market, the referral system must be robust.
It is. I mean, there's no shortage of groups to work with. But we take a lot of pride of an open door policy and speak to everybody.
So is this at the entity level or at the asset level?
It's at both. So the investment is two-pronged. There is often what we call a property or propco investment, where we're investing into assets to help build a portfolio, but they're meant to be used strategically to aggregate capital around it. So we could do deals, use those assets to seed a fund, an SMA, co-invest off of it, but that's the real estate experience. But then we're also doing a second investment, depending on how you structure it, into the OpCo, where we're buying a common equity minority stake in the business. And that could be useful to help recap older partners or put growth capital on the balance sheet of the OpCo.
So Mo, on the GP Solutions side, walk us through the structure of a typical deal.
Yeah, for sure. So that's the fun thing. I mean, we start with the GP in mind and what their capital needs and how a partner could really be additive to their business. So we'd like to think that we're flexible and creative in doing that. But they do take the form of several different versions. And a deal we did recently, I would say, was a propco opco deal where we're doing a property level investment as well as an operating company investment. On the property level investment, we provided about $70 million to invest into seed assets that would form the basis of a commingled fund. So it's a credit shop. They do loans. We basically gave them capital to originate a bunch of loans that now they are marketing that portfolio to other investors in a commingled fund format. If they're successful in raising the same amount of capital that we've put in, then we just fall away as a regular fund investor. But if not, then maybe we can use those assets to seed an SMA. Maybe we could co-invest off of it. From my investor standpoint, the worst case is we basically have an SMA with this group where we have, with a group we like and a category and real estate theme we want to be in, and that is the basis of the investment. But hopefully it leads to some sort of investment management outcome out of that. And that's complemented by a second investment into the operating platform. We bought just shy of 25% of the business here. A lot of that reason was for economic and governance alignment. By virtue of being a strategic partner on the real estate, we want to be a partner in that upside and growing the business as well.
So let's get into the level of involvement. I'll use your terms. You're a partner.
Mm-hmm.
What is the level? Slicing a check is easy. What do you do after that?
Yeah, I mean, we take the position, and we're focused on middle market groups. So these are groups that are at the scaling moment of their business. They're not startups. They've had track record. They've had capital formation, but they're not quite ready for a GP stakes type of execution, recurring fund management. So these are very accomplished groups that are looking to get to the next level. And so our journey with them is one of that of a strategic partner. So we're not passive. We're not just writing a check and going away. That's our approach. But nor are we necessarily involved in the day-to-day. I mean, there's a lot that the management teams need to do. We're somewhere in between where we have very functional rights as being a part owner in the business.
Is it a seat on the board type of arrangement?
Usually a board seat where you have approval rights around financings, dispositions, budget approvals, et cetera. But what we hope is that our groups are really using us as a strategic partner. We're helping them frame the business plan, pressure test it, think about other ways to raise capital, use our own network to help them raise funds as well. And then we have leverage our data and analytics, insight, technology to help bring these companies to the next level.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York. Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
when you mentioned earlier strategies that are attractive to you, first of all, A, do you ever have overlapping strategies? Is that possible? Or is there an exclusive on each strategy you pick? And also, what strategies are attractive right now for Madison?
Yeah, I mean, I'll start with the second one, then we can go to
Yeah.
the first one first. I mean, uh, the essence of our program is thinking about real estate as a business, and it works well for asset classes that are more operational in nature. Although I think you could apply that to even the main food groups are becoming more operational as well, and that's driven by technology and the need for the real estate value proposition to be more than just where you are. It also means how you operate it, how you create network effects, and how you risk manage it. And so we do very well around some of the more alternative asset classes, self-storage, cold storage, data center. Data centers is kind of a different thing now. It's an infrastructure scaling game, but the more operational the asset class, the better it fits within a platform model. So we like all variants of that, put iOS in that category as well. And then we also like living sector strategies. I mean, we're focused on, we still like multifamily. You got to be a little careful about where and the amount of supply and the like, but we still think that that's an enduring trend.
So where does retail fall into the hierarchy of asset classes for Madison?
Yeah, retail is definitely moving up on the list. I mean, what you've seen in the last 15 years is just retail's been hard, right? First e-commerce, and then a bunch of other structural factors, which is
Bricks and mortar has been tough.
right. And so there's less groups doing it, and the vertical integration in retail is very important. The leasing relationships, especially for multi-tenant, and then a lot of the tenant base is national in nature, so they want to be in many places. So you need to service them in many categories. So it fits really well from a platform execution standpoint. It really is a business, but it also from fundamental standpoint, the supply has been negligent. Retail trends are coming back. Financing's accretive. You got to be a little careful with maybe some consumption patterns on the forefront, but in general, we're very constructive on retail.
So you mentioned something. Do you only invest in vertically integrated operations?
We do, yes. And that goes to the thesis of what we were saying of real estate increasingly moving from a financial asset to an operating asset. And so a platform approach where and how I define that is the vertical integration, the investment management function, and maybe a balance sheet for deal capital all lives under one roof. So it's all integrated. It looks like a business. You risk manage it as a business. And so with that, we are just focused on vertically integrated groups. They're usually specialized in one category, but that's how you operationalize and build scale is through that vertical integration.
And bring that up again, I know I asked this before. Does it matter? Do you have exclusives with any particular type of style or strategy, or can they be overlapping?
They can be overlapping to some extent. I mean, we can have multiple multifamily groups, for example, probably not in the same geography. Because we want to make sure we have good diversification in our portfolio for investors, and there's also an element of competitiveness with other groups. So I wouldn't say it's we're only going to have one industrial group or one multifamily group, but they won't be overlapping when you look at the strategies underneath.
So can you tell us a little more about Madison, its history, and how it all became Madison International Realty?
Absolutely. So Madison was started 20 plus years ago by our founder, Ron Dickerman, and he recognized the opportunity in the marketplace for liquidity solutions, seeing sort of real estate as this large but very illiquid asset class. Especially back then, if you're a real estate investor, you signed up for something, and it could be a little while until you got liquidity. But sort of investors change, their profiles and preferences or capital needs change, and that may be unrelated to what the underlying real estate was. So Ron was really focused on finding solutions for the marketplace where investors could get liquidity at a cost, because the liquidity they're providing, Madison was providing, was not necessarily for 100% of the asset, it was for something less. And so with that, this business was born about real estate secondaries. And Madison and Ron were one of the pioneers in the business around real estate secondaries.
So he was akin to a market maker in LP interests. Is that fair?
Yeah, but the difference was, the fund LP interest has been around for a while. Ron was really focused about doing it at the deal level.
Mm-hmm.
So you could just get better execution there. Because when you do the fund interest, I mean, it's a useful structure. If someone buys a fund interest, you can get exposure to a lot of groups and a lot of vintages. But you get very little information on what you get. You got to kind of take the good with the bad. But doing it at the asset level, you can be very precise about what real estate exposure you want, what sponsor risk you want to take, and have really good visibility into the underlying business plan. So we always thought it was good risk reward, That business has evolved quite a bit since Ron started. There's a lot of large players in the space. Madison remains the only independent group in the mix yet, but it's especially in a world where typical fund investment cycles have been disrupted. The secondaries player, whether it's LP recap, GP recap, or all the above, that's definitely a big part of I would say highest and best ideas in the marketplace right now.
So let's talk about Mo. What does a day in the life of Mo look like?
Well,
And can you tell us everything that happens in the day of the life of Mo?
yeah, I mean it's pretty straightforward, but
Okay.
I think I'm interesting, but not that interesting, I guess, at the end of the day. But so I'm really focused on building this business at Madison. We have a great institutional backdrop. Madison brings a lot of great investor relationships, expertise, and in my role as deputy CIO, I'm helping out with that part of the business as well in terms of where we invest, why we do so, and then building the organization. But the majority of my time is around building this platforms business, and I'm proud of what we built to date. I mean, a lot of that is sourcing, executing platform deals, capital raising. We kind of do that within our team, and then the asset management is cradle to grave. You did a deal with this team, you're with them the whole way, and so there's very discrete business plan and board meetings that you're doing, but I'm talking to my partners all the time.
So you sound really energized. What drew you to Madison? Tell us about the dating ritual, how you landed at Madison, and the game plan.
Yeah, I mean, prior to Madison, I was at GCM Grosvenor for 6 years, which was a fantastic experience. I love the firm, and my old boss, Peter Braffman, is still a good friend and mentor. And so,
And a former elevator pitch with Jonathan and Mitch guest.
yes, I think episode 2. He was
Episode
the
2,
trailblazer
he
for you
came on
guys.
episode 2. Yeah, you really did your homework.
But we're here with you now, Mo. We're here with you.
Yeah. I mean, it was such a fantastic experience. I mean, Grosvenor more broadly is a private alternatives asset class, public and private, actually. And so learned a lot about different parts of the investment spectrum, not just real estate. And I had a background in private equity before, and I could walk through that a little bit. But so I got to see the big picture there, which was great. And Peter's team, especially on the real estate team, we did a lot with emerging managers, so incubating businesses and start doing the earlier stage work. And then the opportunity with Madison came aboard, which was just really compelling because the focus there was a little bit more the middle market. And before I got into real estate, I had a career in private equity where I was doing
We're going to get
consumer
into
goods.
that.
We're going to talk about you more.
Consumer goods and industrial goods companies. And I learned a lot about scaling businesses over there. So it was a good time for me to bring sort of an expertise and pattern recognition I had before in private equity to, I think, an inflection point, at least in private real estate, around scaling businesses in a very different market environment. And that's where Madison was focused, and that was very interesting to me. Plus, I mean, I got to be the guy. I lead it. I'm involved in all parts of the business, the deals, the capital formation, the product structuring. And so it was the right challenge for me at the right time.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title, NCS New York.
Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
You ready to talk journey?
No, not yet.
Not yet?
I have a couple
Okay,
more
well, we're gonna
questions.
get
I have
there.
a
We're
little
gonna
couple of
get
more
there.
real estate questions because you talk about sourcing deals, and that is so hard today. I mean, several of our guests say they get brought 300 different deals a year. What does it look like for you on the menu?
Yeah, I mean, very similar. I mean, this type of capital is very top of mind for GPs. I mean, for both cyclical reasons, but also secular reasons. The cyclical reasons, I mean, it's just hard to raise, period.
Yes.
Right? So everyone's getting more creative on how they're trying to raise capital, a strategic partner that can help them build portfolios to engage capital, that's a step up, right? If you can show an investor actual assets, maybe at a basis that's compelling in the marketplace, then you're going to get better looks in a competitive environment. But there's secular trends that are making a strategic partner all the more important as well. The business is a lot more scaled than it used to be, meaning the startup cost, the GP commitments, everything is just more expensive. So a strategic partner can help that. But it's also help on the LP side. The LPs are starting to consolidate GP relationships. And so our model is very simple. Our capital, it represents an underlying mix of LPs, and you're basically letting them as partners into your business. They're on the cap table. And so to the extent that they have specific portfolio needs, I need more industrial, I need more multifamily, they're economically incented to help it grow with groups that are in the family. So yeah, a very similar experience. There's a lot of groups to work through. These conversations often take years.
And what are the criteria? Because that's a lot of dating.
Yeah, from my standpoint, I mean, the first and foremost is the management team, their experience, not just on the deal side, but raising capital, and temperament, cultural fit. That's very important. I mean, that's the most important thing, because it's you're working with these guys in a day-to-day setting, so it's that's probably high on the list.
You've got to click. You've got to click with them.
And what size? What's your minimum size in looking for deals?
We're typically writing a $50 to $100 million check. In some cases, we can do a lot more.
Okay.
And we're looking for middle market groups that have, sort of, you get there around about $1 billion a gap or so, but they have profitable operating companies, track records, and historical evidence of capital formation. So it's maybe a little bit later stage than what I did at GCM, just different risk reward. I like both of them a lot. If you want to use a venture analogy, kind of more focused on growth equity versus seed. And
just staying with that analogy, do you go in with an exit strategy time-wise?
We do. So our capital is in a closed-ended vehicle. So exit is top of mind when we go in. So we're not kind of a GP stakes execution. I mean, that can be very long-dated, perpetual. A lot of that is buoyed by insurance capital or public or long-dated capital. We're kind of right before that group gets to a GP stakes group. And so we come in with a close-ended timeline. So again, that's why the majority of our check is in real estate from an investor experience standpoint. 70-80% of that capital would be real estate and real estate duration. But for the OpCo, we're also looking for an exit caught year 6 through 8. And there's a bunch of ways to get through that. There's no silver bullet on this. I mean, it's all about trade-offs, as you guys know. But it could be the form of put options, sweeps. Our approach, we don't ever have a forced sale right to sell the business. We want the GPs to control their fate. So there's a bunch of things that can happen. M&A might be part of the equation. So that is the usual path for an exit.
And just to finalize the rest of this question, are you also looking at fund managers as part of the equation, or are you just really looking for OpCos?
Yeah, I mean, we are looking for vertically integrated groups. Okay. So they have the execution in-house. They may be fund managers, right? You have vertically integrated fund managers, and the part of that journey might be, hey, we have the vertical integration, we have funds, but we want to raise more capital, different types of capital, or get to a scale that maybe one day we can get do an M&A event, get a GP stake execution. So we're the group right before that helps them get there. Okay. And so we would do a fund manager, but they would need the vertical execution. What we wouldn't do is work with a capital allocator. I mean, that is in contravention to where what this business model is and what we define as platform investing.
All right. So Mo did not start his journey thinking purely real estate.
We're talking journey now.
We're talking journey, right?
Journey.
And
journey.
Your journey took you to some interesting places like Emporia, Kansas.
Yeah.
Talk to us about those days.
Yeah, I mean, so right out of college, my first job was in strategy consulting with BCG. It was a phenomenal experience. And then I went to middle market private equity. I was really interested in how businesses worked, and that was a great generalist environment. And we spent a lot of time on consumer goods and industrial goods companies. I was with a shop called French Scholar, a bunch of wonderful guys that really taught me the business. And they were great at many things, but they came from the operational side of the business. They weren't investment bankers, they weren't financials. They had bought businesses, basically right out of business school and built those companies. So the mindset there was very much, okay, you buy it well, but like how do we grow and scale and operationalize these businesses? And so through that tutelage, I was really interested at going to the portfolio companies, and they afforded me the opportunity to do so. So I spent a year in Emporia, Kansas at an automotive aftermarket manufacturer called Hopkins, and worked directly for the CEO, wonderful guy, taught me a lot about the business. And that was an interesting challenge because that was about supply chain. It was about getting product as quickly as possible to the Walmarts and AutoZones of the world. Back then, a lot of that question was, do we manufacture domestically? Do we outsource it from China? And that was my first view of where the real estate fit in.
See, this is fascinating because many of our viewers look at our guests and look at their path and their journey, and they think sometimes it's very linear. You're not. And I think that makes for a well-rounded foundation.
I would completely agree. And then the second part of that story is then I went to a women's skincare company in Phoenix, and that was a sales and marketing organization. It's a completely different business, right? About branding, about connection with your customer. And this was by design. I wanted a broad experience. I kind of have a generalist pattern recognition mindset, and I think it's becoming more valuable. I think there was a phase of specialization in our business and more writ large, and specialization is not going anywhere, but the investment environment is becoming more cross-disciplinary, pattern recognition, convergence in my mind. And so the ability to stay broad and recognize, but also go deep when you need to go deep, and know how to switch between both of the others, I think is becoming more important.
So does that give you sort of a different approach when looking at real estate platforms? I mean, are you using that generalist and deep approach?
It's a great perspective. It's a great perspective.
Yeah, absolutely. Because when you look at the real estate as a business as opposed to an asset, it has a lot in common with other assets, right? Because how you run the business, how you raise capital, and how you operationalize and scale those businesses, those rhyme a lot more across asset class. So the ability to go broad helps you understand, okay, I want to be in this asset class versus this, risk adjusted. But then if you see patterns emerging from one of those asset classes, you're like, okay, I can operationalize it if I go deep in another asset class through a platform approach. And I saw that very distinctly in private equity, where I think the range of outcomes is a lot broader in terms of the different things you can do. But real estate is starting to act more and more like that with the vertical execution and the more operational intensity of the asset class.
So being with PE for all those years, your whole approach or thesis is to look for undervalued assets and then obviously create value. Where are you seeing that in real estate right now? I know you're not going to give away the secret sauce, but right now, where are you seeing that undervalued asset class?
Yeah, it's a tricky time period right now from a macro standpoint. The cost of capital has shifted quite considerably, and real estate being an cost of capital intensive asset class and margins being thin only gives you so many tricks, right, compared to some other asset classes, which is why it's been a little tougher for real estate to rebound. So we look at it more from a business standpoint, a platform standpoint. Yes, the asset class needs to make sense. Yes, the geography needs to make sense. But what we're doing is taking these businesses at a point where we think that they can further vertically integrate them, get better investment outcomes, and that's going to matter a lot more. I mean, we had 10, 20 plus years of declining interest rates, which was a financial trade, but how do you create NOI and drive value at the property level? Well, we think a platform approach is going to be more efficient at doing that. So the vertical integration will add towards hopefully top line and NOI growth. It'll risk mitigate it better. It'll be able to aggregate a portfolio of assets to create scale. And I'm pretty bullish about doing that in several asset classes. It's, the platform approach is more of a 7 to 10 year horizon, where maybe the asset approach is a little bit more cyclical, 2 to 5 years, depending on your business plan. And so we find compelling themes in all asset classes: residential, retail, industrial. And the idea is just sort of, well, do we have the right management team focused on the right part of that, and can they scale the business? That's the journey we go on.
Can we go back to the journey for a moment? Because we're in PE. At what point was the off-ramp towards real estate?
For me personally?
Yeah.
Yeah, so I had this phenomenal experience pre-business school where I tried out a bunch of things. Again, that was by design. And I said I gravitated most to the investment management world, but I wanted to work in an asset class that I loved. And how that came about is I did a deep reflection of who am I? What do I like doing? I thought, hey, I like traveling. I like maps. I like knowing what part of town I'm in. So just from an emotional standpoint, real estate made sense. But then I had some projects along the way at these portfolio companies that had a real estate component to it. I got just really energized about it. So I tested this out at business school, was in the real estate program at Columbia, which I loved, and it was an amazing experience. And then my first job out of grad school was with CIM. I moved to LA and was at CIM for 8 years, vertically integrated, 5 billion AUM when I started, then went to 30 billion AUM while I was there. So saw a lot.
What was the key thing you learned? 8 years is a nice run. What's the big takeaway out of CIM?
I mean, so many things there, but just when we talk about being broad and then going deep, I mean, I saw that firsthand at CIM because we touched everything. We touched core plus, value add, opportunistic, all asset classes, urban mixed use. But then, in order to actually operationalize these business and line it up with a bucket of capital, you had to go deep as well. So they really taught me the business from a real estate standpoint, how you get from 5 billion to 30 billion AUM. I mean, it's not a light lift. I mean, there's lots of ways to do it, but it was fantastic for learning the real estate and then the business of real estate behind it.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York.
Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
In terms of scaling that way, and you mentioned this earlier with data centers. I don't know if that's on part of what your investment is right now, but they're getting into more of a real assets class right now, where infrastructure and real estate is starting to merge. Are you finding that as well?
Yeah, and I think the platform approach is really well set up for that. As real estate gets more operational and infrastructure, the revenue streams become more speculative in nature. There's this real nexus around real assets. And I'd throw private equity in there too. Private equity historically has been asset light, but I think private equity is more open to owning assets, different cost of capital because there's scarcity value in some of those assets. Because the trade used to be just lower cost of capital, so that's why you wanted to be asset light. But in a world, and you're seeing this geopolitically as well, there's increasing scarcity value, there's strategic value to owning things as opposed to renting things. I think you're seeing a convergence of all these asset classes, and I think we'll just be talking about the business completely differently. Again, we are set up as specialized silos right now, so there's some cumbersomeness in that conversation. But once groups start getting above the rooftops a little bit, and you're seeing that in terms of pensions merging real estate and infrastructure and total portfolio approach and things like that. I think this business will morph into just kind of like what's the best idea for an investment, risk adjusted, not necessarily just real estate.
Well, let's talk about the morphing. Mm-hmm. So here you are, like you said, you're in charge. You have an area you could sink your teeth into. Where do you want to take it in the next 5 years?
Yeah, I mean, I'm really keen about growing the blueprint that we built out. I think it's a good one. We're focused on the middle market, so kind of not the earlier stage groups and not the GP stakes group. The middle market to me is the most underserved part of this market because it's hard.
And what are you defining as middle market, just broadly? Because that term is used in kind of broadly.
Yeah, exactly. I mean, plus or minus like about a billion of GAV, maybe a little bit more. The crucial point is it needs to have a profitable operating company. So we look at companies with at least 2 to 3 million in EBITDA.
Okay.
Generally a lot more. So they've gotten through the profitability ramp up. And
so you're looking at it like a private equity firm as opposed to a real estate operating company.
In some ways, right? I mean, there's definitely things that rhyme with private equity in there.
Yeah.
In terms of. But our approach is a real estate asset-heavy approach. 70-80% of our investors' capital is going in real estate and themes we want to be in. And so we're really underwriting the real estate and the execution. We're trying to create asymmetric upside with this investment in the OpCo. The other way I like saying it is real estate downside, private equity upside. The majority of your experience in real estate and themes you want to be in, but by virtue of fashioning your capital as strategic platform capital, you can capture some of that upside that, frankly, your capital creates in the first place anyway. And that's been a little bit of the miss between the LPs and GPs in real estate. For a capital-intensive asset class, most of the GP value accretion has gone only to the GPs. This model aims to correct some of that.
And for the benefit of our viewers, are there any strategies you're simply not looking at right now?
I mean, office is tough across the board. I mean, I'd say there are compelling opportunities in office, and I think they're sort of more basis-oriented or long-term buyers will do well. Although that's starting to change too. I think the institutions are starting to show up there. But a platform focused on office right now, 10-year tail, that's a little tough to wrap our head around at this point. I think it'll be more of a deal-by-deal transaction until there's more confidence into the office segment, or what themes are relevant in office, what geographies. We're still trying to figure that out. Work from home is still lingering, and we're trying to figure out what that means.
Hard to go to an investment company and say, I have this great office deal, even if it's a great office deal.
Yeah, and it's probably unfair to office, but it also works the other way around with the LPs. I mean, the LPs already own so much of this stuff.
Well, it's got to fit within your business model.
Yeah, I mean, there's that, but the LPs already own so much of it, so you can be contrarian, but you got to be understanding where the LPs are coming from. They're like, hey, I got a lot I need to work through here. I just can't really double down on this, even if it makes sense from a financial investment.
So generally, using the liquidity solutions concept, what's the breakdown now? How is it more LP and GP, roughly?
Yeah, I mean, I'd say the market overall has been much more GP oriented because these GPs are sort of controlling these assets and have been able to print a good return for their investors, but there's more to do, especially in terms of portfolio aggregation. You see this in industrial, you see this in multifamily, and so there's been a lot of GP-led recaps in the space to that effect, and they've also been another way to raise capital. I mean, fundraising is difficult, so the traditional raise a fund, investment management model has been more difficult. So secondaries provide a path towards liquidity, whether it's recapping or continuation vehicles or all of the above. Madison's approach, we don't do as much GP-led. We like the dynamics embedded with kind of providing liquidity for an LP. We think we just get a better execution for our investors from a risk-adjusted standpoint. But in select cases, we may go do sort of something that looks a little bit more like a GP recap.
We need to learn a little bit more about Mo the person.
I think Mo the person is the most important part.
Yeah, I'm going to throw out a word: trombone. Talk to us.
Well, music has been.
And I may be the only non-trombone player here, but go ahead.
You are.
Music's been a big part of my life since I was a little kid, and I played trombone through college, and then had another stint at it in grad school in our rock band, which was maybe the most.
So
fun.
if we threw a trombone at you right now, could you go at it?
I'm a little out of shape, but I probably could make it sound halfway decent.
He can make it slide.
Yeah, when the trombone, you can do some fun things with the slide, and so like it's.
Does it have a spit valve like a trumpet?
It does.
It does. Look at that. See that?
They all do. Otherwise, it's just
Otherwise, you're drowning.
You're drowning.
Yes.
But I love playing. I played at school in the wind ensemble and the jazz ensemble. And
that's when you weren't doing sports radio.
I did sports radio at the same time as that. So I had back to kind of the generalist approach. I treated college the same way. I wanted to try a whole bunch of different things.
I'm with you 100%.
I did student government, sports radio, played trombone, and a bunch of other
Sports
things.
radio, not at Columbia.
No, that was at undergrad at Penn.
Okay.
I covered the Penn basketball team and was the color commentator about my senior year.
And your favorite trombone player?
Oh, wow.
Is that because you have a favorite, Jonathan?
No one ever has a favorite trombone player.
Yeah, I wouldn't say I have a favorite trombone player, but just in terms of jazz, I love. I mean, Miles, of course, John Coltrane, some of the more contemporary stuff, Chick Corea, Chuck Mangione. Got to open for Herbie Hancock. Penn Jazz did when we were in school, which
Very
was an
cool.
amazing
Wow,
experience.
that is a bucket list.
Got a
item.
CD signed by him. I don't know if anyone has CDs anymore, but I still have at least one.
That's awesome.
So yeah, that was a fantastic, memorable experience.
Talk to us a little bit about some of your travel accomplishments. How many countries have you been to?
I love traveling. Yeah, I've been to 67 countries.
Amazing.
And hopefully, would like to get a bunch more.
How many continents?
All 7 continents. And as a big part of that storyline was I used to really be into mountain climbing. And so
Now there are 7 summits. Is that right?
the Seven Summits is the tallest mountain on each continent.
Right.
And I, at some point, was trying to do that. I got 6 out of 7.
Wow.
Still got Everest. So maybe not. It's all good. I got young kids now.
Now you can take the kids.
Yeah, I don't want them to do it. Yeah, I'm not going to tell them about this stuff. So, they got to find their own thing, their own personal journey. But mountain climbing to me was
They may go deep sea diving. That could be the
all
opposite.
good.
they,
It's
have
all
to do,
good.
they have to do the opposite of what a parent does.
right. But mountain climbing, just love doing it. I mean, just sort of love the grind, love the pursuit. I mean, the adventure is the journey is more important than the actual accomplishment. Otherwise, you're not going to get up there in the first place. So, a lot of Zen things. But yeah, I got to travel a lot with that. And
Closer to home, did you hit all 50 states?
I've been to all 50 states. So
I thought only 49.
Yeah,
We're going to get a
50.
clarification. Here it
Well,
comes.
I've been to all 50 states, but my love before mountain climbing was road tripping.
Yeah.
I would take my parents' minivan over summers and just drive. And so I've driven to 49 states,
Oh.
including Alaska, but I couldn't find the bridge to Hawaii. So I had to just go.
Okay.
So
That's awesome. So what do you like to do now? If you don't have time for mountain climbing and traveling to all 50 states is a little tough in your schedule, what do you like to do when you're not doing big deals?
yeah, I mean, I'm really in dad mode right now. I got 2 young kids. My daughter is 8 and my son's almost 6, and they're
you're busy.
prime time. Like we're having a ton of fun. We love spending time with each other.
Do they know that you're on Elevator Pitch with Jonathan and Mitch?
I tried to tell them this morning. and
How
they-
excited were they?
There was like, does it have anything to do with Minecraft? And I said no. And then they said, okay, well, like come back to us when like I
Okay.
can draw the world in Minecraft. So an
We're,
idea.
we're not there yet.
not
We're not
there
there.
yet.
We
Not
haven't hit
quite there
the kids yet.
Yeah,
Okay.
yeah, I get it.
But yeah, I spent a lot of time with them, and I try to get some exercise now and then. But yeah, just a different phase of life, and I'm loving it.
That's wonderful. So looking forward in the next 5 years, Mitch brought this up before. Where do you see yourself?
I mean, I'm excited about platform investing. I mean, I think it's a big shift in mindset for real estate investors. Again, real estate moving from a financial asset to an operating asset. So I think we're just at the beginning of this, at least in the private markets. It's been the public markets for a while, of this thinking. I feel that what we're doing at Madison, we're a thought leader in the space, especially in the middle market. So I look forward to continuing to build out this vertical, having more partnerships with GPs and helping them grow their businesses and getting some good outcomes as partners together along those lines. And I think the real estate business is going to look completely different in 5 years, but I think we're in front of the right train on that one.
Now, we'll ask you, as we ask all our guests, share with our viewers, there's a large percentage out there that are looking at Mo and saying, how do I get to become Mo? Where should I go on my path? Who should I be speaking with? What should I be doing? Give some insights
Like
to
a
our
young
viewers.
person?
Yeah.
Or just, I mean,
Or someone who's in the business and looking to
Maybe
switch gears.
change careers?
yeah. I mean, you got to feel for it. My path has not been direct at all, and by design. I wanted to try out a lot of different things, and I think
Well, you
that
don't
was
go to 50 states if you don't want to try a lot of different things.
yeah. I mean, that was its own journey, and that's everything you do has a storyline. It might not seem it at the time, but you learn something from an enterprise that's completely different from the one you're doing now, and that's how you create value. It's connecting those dots. It's recognizing things before they happen. If you're solid in one thing, you may be very good at that one thing, but in a world that's becoming more cross-disciplinary, the macro matters more than it used to. Being able to recognize patterns, I think, is very important. So embrace trying different things, whether it's professionally or in your hobbies or whatever it is that you're doing.
Being well-rounded.
Being well-rounded, I think, is making a comeback.
Yeah.
But the difference now is you need, when you stay broad and be well-rounded, but when you go deep, you need to know how to go deep. So you have to have done it once, because that's how you operationalize and scale things, including businesses. So whether you need to go deep on everything all the time, no, but when you need to go deep, you need to know how to go deep.
This episode of Elevator Pitch with Jonathan and Mitch is sponsored in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title NCS New York.
Life at Pearl House shines brightly. It's where smart design meets condominium quality finishes. Pearl House, the beauty of smart living.
Commercial real estate is evolving, bringing new challenges and new opportunities. At Commonwealth Land Title National Commercial Services, New York, we provide trusted guidance, deep commercial experience, and seamless coordination on complex transactions grounded in local insight and backed by national resources. Commonwealth Land Title, NCS New York, trusted to move your most complex transactions forward.
Mo, you had brought up using analysis and going deep. Are you at this point in your career, or is Madison at this point in its trajectory, applying AI or any of the tools to actually move you forward?
Yeah, absolutely. So, I mean, I guess one of my hobbies, even now, is I read a lot about technology. So I've been into it since I was young. Just what's the next thing? So I'm really interested in AI, but also things like blockchain, alternative energy sources. All of this forms the big picture of, I think, what's coming next, and especially the interplay between AI and blockchain. I find to be super fascinating. AI is this model of a digital abundance, and blockchain is this model of digital scarcity. And when you marry those two things up together, I think you see some interesting concepts. The problems with an AI world is you have this LLM just sweeps up all this information. How does anybody get compensated or acknowledged for their contribution to those things? So then blockchain is a big piece of that as well. The fun part of this is those two things are lining up at the same time. I think it's just going to be massive for the world and the investment management business. So paying attention to both of those trends. AI, I mean, I use as much as I can. Like ChatGPT is like my best friend. Like we go through personal problems. Like I'm always on it, and we're talking.
Don't go too deep into that. Be careful.
Yeah, I mean,
ChatGPT, the new therapy.
Yes.
I mean, it's an interesting concept. I mean, how do you operate in a world where knowledge gets commoditized, right? And so going back to pattern recognition, and AI can help you with those things, but yeah, you need to think a little bit bigger because AI lets you go deep, really deep when you need to go deep. So I mean, it's going to be a useful tool in that way. But yeah, again, I'm really interested in that marriage with blockchain. I spend a lot of time studying that space as well. And yeah, and Madison is embracing AI, like I imagine a lot of firms are. It's a little tricky, right, in terms of how to actually operationalize it. What work streams does it work for? But we've had great success in terms of using it to help us with market selection, evaluating deals quickly. I could be on with the sponsor and they may talk about their market and I can just type something real quick and get a data point that just enhances that conversation, goes to the next level much faster.
I use that with Mitch a lot.
It's a useful tool. It's a useful tool. Before we advance ourselves to what we call our lightning round, I'm going to ask you, can you share, and you've been so great about sharing your story, tell our viewers one thing that nobody knows about you.
I don't know if nobody knows this about me, but like I have a pretty good memory for sports champions. So think about a league and a year, and also really good at world and state capitals. So like I'm good for quiz night. I've won some bar bets with it.
Okay.
But yeah, so.
All right. We might have to tap into that on another occasion.
Another occasion. Okay.
Lightning round?
Lightning round.
Okay. These are questions that are quick and to get a little bit of a bird's eye view into Mo. Action movie or rom-com?
Action.
Okay.
North Dakota or South Dakota?
North Dakota. Is it lightning round or you want me to elaborate?
No.
It's lightning round.
Tattoo, yes or no?
No, except for one situation.
He hesitated.
Okay.
He hesitated.
If I ever got that 7th Summit, I would get a 7th Summit.
Okay.
Okay,
Yeah, that makes sense. Mo Vaughn or Mo Green? It's a Mo theme.
Yeah. Move on.
Left out Mo Howard. We'll get into that. And our last lightning round question we ask every guest. Is it better to be lucky or to be good?
I'd say good. And good because if you're good, luck will come. But let's say worst case, it doesn't. At least you can look at yourself in the mirror.
Awesome.
Well, that is wonderful. Mo Saraiya, Madison International Realty, thank you for joining us on Elevator Pitch with Jonathan and Mitch.
Thank you, Mo.
Thanks for having me, guys. This was a blast.
You got it.
This episode of Elevator Pitch with Jonathan and Mitch was made possible in part by Pearl House, a Van Barton Group holding, and by Commonwealth Land Title, NCS, New York.